Zafar Masood Saab, Chairman Pakistan Banks Association and CEO Bank of Punjab. Ataf Bajwa Saab, CEO Bank Al-Falah and Chairman of this summit. Munir Kamal Saab, our distinguished speakers from international speakers, presidents and CEOs of banks and other corporates who are attending, distinguished guests, ladies and gentlemen. Assalamu alaikum and a very good afternoon. Bajwa Sahab, you have raised some of the very pertinent points. I will come to them briefly later on, but let me first start with the expression of my appreciation to Pakistan Banks Association for organizing this event. This summit reinforces the financial industry's commitment to excellence while acknowledging the complexities and ever-evolving dynamics of financial and economic environment. I am very pleased to note that the variety of speakers at this summit, including bankers, economists, academia, agriculture experts, tech and sustainability experts, and other non-banking corporate and financial sector professionals, have contributed in the discussions over 1.5 days, 2 days. I am grateful to all of you for your active participation. I firmly believe that you all have an important role to play in shaping the future of banking industry in Pakistan. I hope that the takeaways from this summit will lead us to rethink our business models and come up with innovative solutions to ensure that our banking sector contributes more effectively towards our collective goal of sustainable and inclusive economic growth in the country. This summit is happening at a time when Pakistan's economy is emerging strong as a result of stabilization policies of recent years, and simultaneously technology-enabled financial services are also changing the business models, and the associated risk profile is also changing. It is only befitting to make an assessment of the current situation and lay out the future course of action for all of us. I am also pleased to observe that the broader themes of the 2 days summit are aligned with the SBP's strategic plan, which we call Vision 2028. For the financial sector, the SBP vision mainly focuses on promoting inclusive and sustainable access to financial services, building an innovative and inclusive digital financial ecosystem, and enabling efficiency, effectiveness, fairness, and stability of the financial system. These focus areas are based on the recognition that Pakistan's banking and financial system has contributed to economic development of the country and has showed resilience on a variety of global and domestic shocks, However, for achieving a more inclusive and sustainable economic growth, the country would require a significant increase in the depth and breadth of the financial sector. At the same time, customer preferences are fast changing that, along with the structural changes, particularly driven by technological advancements and climate change, are expected to reshape our banking sector in the coming years. Accordingly, the State Bank's strategic goals aim to address emerging needs, including sustainability, climate change, and rapid digitization, and also inclusion and customer-centric banking services. With this background, let me sketch out a few of the focus areas and my expectations from the banking industry going forward. Specifically, I would like to emphasize that our banks need to rethink their current business model, reassess their priorities, and play a more active role in financial intermediation. I believe it is increasingly becoming essential for banks to diversify their exposure beyond the government sector and big corporates. And it makes long-term business sense for banks to invest in building relationships with small value savers and borrowers of our country. A broad-based customer network and a well-diversified asset base are the only long-term assurance of sustainable profitability for our banking industry in the years to come. Ladies and gentlemen, with that, I would like to begin by reiterating the need to significantly increase financial deepening in the country. The size of our banking industry has not grown at the pace that was needed to meet the financial services requirements of our growing economy. Banks' deposit and private sector credit to GDP ratios in Pakistan have remained one of the lowest among peer countries. In fact, banks' credit to private sector as percentage of GDP has declined to 8.4% by fiscal year 2024, almost half of the level recorded in the year 2004. No country can achieve sustainable economic growth with such a low levels of credit to the private sector. It is common to attribute this trend to high government borrowing from the banking sector in Pakistan. But the notion that availability of attractive returns on risk-free government securities does not hold tenable currently. There are quite a few countries where government borrowing from depository institutions as percentage of GDP is either higher or comparable with Pakistan. Yet, private sector has a bigger share in the lending portfolio of these countries. Their ability to grow the deposit base and increase financial intermediation at a faster pace than ours largely explain the difference. With the improved macroeconomic environment and positive outlook, the stage is set for revival of credit to the private sector. In the days ahead, the government's borrowing is expected to be contained. Therefore, it is imperative that our banking industry rethinks its business model and shift its focus to the private businesses in search of better returns. Presently, by the way, I have been discussing this during the internal meetings with the Pakistan Banks Association, and today I am publicly sharing this that banks will have to seriously think about their current business models. Presently, major chunk of credit to the private sector is concentrated in big corporates. The composition of banks' lending portfolio in Pakistan is highly skewed towards established corporates at around 74%, and only 5% of the credit goes to the SMEs. Therefore, there is a need for our banks to reassess their strategies. My message to all of you is to focus on mobilizing deposits and increasing credit to the private sector, particularly the SMEs and agriculture sector. Ladies and gentlemen, increasing credit on a sustainable basis and supporting inclusive economic growth would not be possible unless our banking industry redoubles its efforts to increase financial inclusion. We at the State Bank of Pakistan take this objective very seriously. It is a critical driver of our economic growth, development, and resilience. The explicit addition of financial inclusion as one of the core objectives of the amended SBP Act underscores the importance of this objective for the SBP. Our commitment to financial inclusion is also reflected in the significant strides made over the past decade. Bank account coverage has reached close to 64% of the adult population from 47% in the year 2018. Due to our efforts, the gender gap has also been narrowed from 47% to 34%. And we are very grateful to banks for their contribution in achieving this goal. We have now set a target to increase bank account coverage to 75% of the adult population and reduce the gender gap to 25% by 2028. To achieve these ambitious targets, we want to enhance the depth, breadth, and quality of financial services, particularly for low-income individuals, the microfinance sector, SMEs, and agriculture. In this regard, the latest National Financial Inclusion Strategy